What's going on, guys? How are we all? How are we doing on this fine day? Market clear out, running it back up. Is everyone good? What's up, Moran? Angelo? How's it going? Right, so let me just put a tweet out, one sec. Market looking tasty? Yeah, you know it. You know it. A nice healthy clear out there. VDC, how are you doing, man? You good? Nice to see you here as always. So we'll do just a general market run through. See what's happened. Look at some of the markets. My approach, the trades and markets that I'm currently looking at, systems, how to operate, how to deal with these conditions, and yeah, generally how to capitalize and move forward considering the moves we've had. All right, so start things off with BTC. As you can see, not too much action here, really, right? Even looking at the hourly, we're still just very much range bound here. Deltas on BTC, not too bad, right? If we get rid of this enormous positive delta bar that completely skews this page off, then it doesn't look too bad here, right? Two nice clusters, fairly decent. So yeah, not much more to report on the BTC side of things, to be honest. What's going on, SD? How are you? Lovely deltas. Yeah, not too bad. Not too bad. So obviously, basically what we've had now is this. Right, so we had a clear out on BTC, right, before. I think we covered this in the last stream. And now we've had that clear out on ETH as well. Okay, so a healthy correction and cleanup across both BTC and ETH now. If we look at the delta and liquidations, right, we can see lots of liquidations occurred on this spike down on BTC's correction, right? And now we've had the same thing on ETH as well. So beforehand, we didn't really have much liquidations on the ETH side. ETH was holding up during BTC's dump, and now we have a clear out on both sides, basically. So lots of liquidations on both BTC and ETH now, okay? So that's the first thing. What's up, Tamas? How are you? So as we know, so I released a video, when was it? Last week, I believe, the investing video. My first investing video on the channel, probably my last. And in that I said that 30 to 40% corrections are commonplace in bulls. And you can see that basically across most of the alt markets, right? So I take it from the highs to the lows, 38%. Lots of them scratching 40, some above 40 as well. So a super healthy clear out on the alt markets, okay? So BTC we've covered. Still looking strong, right? Still looking strong. The only counter argument to the strength at the moment here is that we dipped under this trend line here. You can see we've reclaimed it as well. So not paying too much attention on that side, right? As far as I'm aware, BTC is very healthy here. This is pretty much just a prolonged range, that we're in. Okay. So 20-day range around the 100K mark. And in my opinion, if we were going to, if basically I said that once we peak above 100, right, we're likely to see some sort of correction. It was more of a psychology-based trade, really, which is something that I've sort of leaned into a bit more in my latter years of experience, something that I do not advocate doing to new traders. To newer traders, I always preach fact over thought. Those members of my group will be very clear with FOT, which is an acronym for fact over thought. Essentially what I mean by fact over thought is don't try and think something, don't try and predict something and superimpose that notion onto the charts. Listen to the charts, look at the charts and see what they're telling you and basically act off what they're telling you. But the 100K notion was the opposite of that, and it's something that only I recommend doing if you do have years of experience in the market, essentially. And it was essentially just the notion that, Twitter was saying that once BTC goes above 100K, that it'll be all across the media. That would then sort of catalyze a huge new influx of retail into the market, etc., etc. We did poke above 100, right? We put in this hourly divergence here. Okay, put in this hourly div. At the same time, the most enormous delta bar I've ever seen using these templates, easily. Which was, of course, enough to send us lower, right? But now that we've had that correction and flush out, Bitcoin purely just ranging and going sideways is very good, right? This is fine. This is healthy. If this was going to be the deviation that topped us out, then we would have seen something more like this. Okay. So, we wouldn't be peaking back above 100. We'd probably just be correcting. It would be more aggressive. In doing so, we'd probably create some pockets of supply. So hover around here, for instance. Create some supply. Keep moving down. And then that would then act as the sort of ceiling again, right, for a more corrective leg further. So this is the sort of price action that we would be experiencing if in my opinion, we were to move further down. We haven't had that. We've just had more range-bound activity. So by all means, BTC is in a healthy position, in my view. Evening Paradise, how's it going? So on the ETH side of things, again, healthy correction. We took out this low on perps, I believe. Yeah, so the low was taken on perps. Not on the spot side. Okay. So low taken on perps, not on spot. Spot doing the classic so far, doing the classic front run the sweep play, which we're very aware about, which we're very familiar with. I've been preaching since the start of these bullish conditions for SFP and swing failure traders to adapt very quickly to the current conditions. You're not always going to get these clean sweeps, entries, tight invalidation setups. Oftentimes it'll just be a defense for market structure, tease the lows and then pop, right? Which we could be experiencing here, right? So ETH is the king of the alts, right? ETH is the king of the alts and it's been leading the alt market. So what we've been seeing across the board is many structures like this, right? 2-hour flat bottom divergences. Like so. And for those that are looking at this and saying that this isn't quite flat bottomed, I'd urge you to watch my divergences video, where I talk about not being so hyper stringent with the rules, right? If this is slightly off, even if it's like this, then it's fine, in my opinion, dependent on the context. Context being here that we have the AO back up, right? We've got clean structure on the candles. And in my opinion, these are valid 2-hour divergences that we're seeing across the altcoin board, okay? What's up, Nazar? How are you? All right, so ETH very healthy on the delta side, right? We covered BTC, ETH very healthy. So we covered the liquidations. Looking at the clusters here as well, right? This looks really nice, okay? Now onto the alts. Actually, let's cover off some of the more general charts as well. BTC dominance. All we need to look at is the higher time frames. Right, covered this off last stream. Trend line broken. Into higher time frame supply. And as long as we don't get this trend line reclaimed, right, then we're in good stead. Okay, we're in good stead. You can even call this the retest here. Okay. So retest here. I expect this moves lower. Okay, I expect. ETH BTC. Still looking at the running 3-day divergence here. Okay. So high lows, lower lows. Totals. Right, totals looking good. Not much to cover here. Just about to move into price action on total 2. Just about to here. So all in all, the indexes and sort of more general higher time frame indicators we use to determine the altcoin strength are looking very good. Still nothing of concern at all there, despite the wipeout, right? Solana. Still looking good. As soon as we get a reclaim above this level here, then we're into price discovery. And I expect a further run on Sol. All right, these are just a bunch of alts that I picked out of the supers, I believe, yesterday. But we'll run through all of that. So. So what I want to cover today mainly is where to be focusing your efforts, right? So many people think that they should be looking for the best technical setups. And we can just take the first chart we're looking at here. Let's flip over to the 2-hour perhaps. 1 hour is a bit cleaner. We can say that, look, we've got this divergence here, right? Flat bottom div. AO showing clear signs. Lower lows on the charts. We can say, you know, we've taken out this level here. And this is a divergence plus deviation play. Let's label it as that. Okay, so this is the deviation here. This is the divergence. And that's the play that we're looking at. So we're looking for technical setups. We're looking for confluence. We're looking for multiple elements of price action to come together, right? And you can do this pretty much across the board, right? So if we go to the 2-hour, some of the divergences that are mirrored from Ethereum. So here, for instance, 2-hour div. AO showing clear signs, whilst RSI is flat bottomed. Okay, and you can say, I don't know, taking out this low here. The point I'm trying to make is that you can weave together a lot of technical setups based on what we're looking at, right, to the downside. Now, what I want you guys to be, so this is a common pitfall I see in new traders, is that they see setups like this and they go, okay, cool. All the things that I've been studying and learning recently are all coming together here, right? This is the perfect storm. We have divergences, clean double divergences. We've got takeouts of many levels here, a clean wipeout. We've even got a large inefficiency here, right? So an inefficiency that it could run it back to as well. And you start getting excited because all of the price action concepts that you've been studying so hard have finally aligned and done so in a pro-trend sense, right? So this is a long setup. You're finally getting those heavily confluenced long setups, right? Now, this is a way I used to operate. This is a way I used to trade, so I know it all too well. This isn't the way that I want you guys to be operating in, because I'll tell you why. If we go back to ETH, actually, let's just take any of these markets here. All right, clean it up a bit. So we've seen the 2-hour div play out, but we could, I'm not saying we will, right, but we could see this. So alts go for another leg. Okay, alts go for another leg. As they do, they form these 4-hour bull divs. Okay, and this is a plausible outcome here. Okay, I'm not saying it will occur. I'm saying that it's a scenario that could occur. Okay, and if you're positioned into essentially what are weaker assets with stronger technical setups, then these are going to get hit hard, right? And your 2-hour divergence plays that you were scaling into will either get stopped or you'll be put into a very sticky, uncomfortable position if they go for the 4s, right? Does that make sense? What's up, V? Get back to your cruise, man. You're an addict. Okay, so I've covered what I don't really want you to focus on particularly. Okay, now to look at what I do want you to focus on. So look at the difference here, right? Look at the difference between the markets we've just looked at and Agen. Okay. Clean technical setup, breaking out of a diagonal trend line, almost completely unfazed by any downturn in the markets. IO, new highs. JTO, a position I'm currently in, looking very strong. Morpho, again, not the strongest, but also has held up relatively well. Ondo, breaking out of a diagonal here. SCR, again, you can look at this and you may not even know that we had what we had across the altcoins. Just looks like a volatility period more than anything. SPX, breakout level on the 2-hour. Again, looking very, very strong. And Hype, right? Another recent position of mine, but again, looking super strong, right? So, yeah, essentially the takeaway is to focus on the stronger markets, right? Because if the stronger markets have held up during the battering that the altcoins took, then they'll be the first to run up, right? As soon as we get alleviation on that sell side, they'll be the first to run up. And you're seeing that in Aegon already, 20% on the day. And this notion of focusing on strength can be quite challenging because you don't have the technical setups to work into as much, right? So before we were looking at examples of, you know, assets that have been seriously sold off up to 40% or more, putting in bullish divergences, taking out key lows with inefficiencies above, right? Here we're looking at what? Just a simple breakout. And the trade-off for that is that we get to focus on the stronger markets. Now, I guarantee you that by focusing on the stronger markets, you will completely transform the way that you look at these market wipeouts, right? You'll completely transform the way that you trade. You'll be much more patient in waiting for those setups to the upside rather than spamming into, you know, 10 setups, putting in bullish divergences to the lows sort of thing. And that's something that I used to do a lot, right? I used to see these technical setups form and go, these are so juicy. There's so many clean setups here, right? I'm just going to overexpose myself because we're finally getting technical setups on a pro trend basis, like I said. And this is the opportunity of the cycle, right? This is the only time we're going to see divergences like this in this run. And that's a massive pitfall and mistake that I made in the last cycle, and something that I want to really impart to you guys. Like, focus on the stronger markets, right? Play the Aegons, right? Play the JTOs. I guarantee you won't regret it, right? You will not regret it. So a good way to scan for strength, of course, is using the overlays, right? That's the quickest way. If you don't know what I mean by overlays, I'm talking about these, right? So you can just pluck out JTO immediately from this. Personally, I like to do a full scan, right? So I've been full scanning this morning, done a full scan on the hourly, a full scan on the 4 hour. Been speaking to some people about full scans on the markets. People say it takes too long. I can do mine in 15 minutes, right? Even if you can do yours in 30. If I'm doing 300 markets in 15 minutes, even if it takes you an hour, right? That's only 2 hours a day, doing the 1 hour and the 4 hour. So yeah, I just don't want you guys to look at 300 markets and go, this is going to take me all day. Piece of advice that I recommend is just setting a timer. Just flick through everything with the space bar, and I think you'll be surprised at how quickly and efficiently you can actually run through the charts. And you know, if we're comparing charts like Aegon to anything else, basically, right? You can pick it up immediately by eye, essentially. So it can be a very quick scan of the markets. You're just flicking through, and you're looking for markets like Aegon, like JTO, like Aave, for instance. Okay, these stick out immediately to the eye, versus those that have been sold off 40%. Okay, Ergo, that's a new one. Again, focus on the stronger markets, and it will do you well. I longed Merl with that div. Yeah, Merl got massively sold off. So again, not something that I'd be playing myself. And I just want to clarify this as well, guys. I'm talking about the perp side of things, right? I'm talking about the trading side of things, not the spot side of things, right? So on the spot side, I am looking for discounts. I am looking for those steep sell-offs. So I'm looking for the exact opposite when I'm playing spot, right? And the reason being is because I understand the fundamentals of the projects that I'm holding. For instance, Carrot, right? Bought some Carrot on the dip, right around 49.50. So around this region here, right? Bought some more Carrot. Reason being is because this is one of my fundamental long-term holds, right? It's my biggest gaming asset in the portfolio. and I'm looking to buy up any dips here based on the fundamentals of this asset, right? Targeting larger multiples, right? For not even position trades, they're just full on investments, right? They're buy, hold, tuck away, keep in cold storage, and it's a completely different game to playing trading or the perp side. So that's just a distinction I want to make very clear. So I'll run through the positions I'm in at the moment because I've already glanced at them. Why not? So hype was the first one, right? Recent position, took this morning. Okay. So you can't really see too much of the historic price action here for hype, but I'm sure you guys are aware of Hyperliquid. It's been all over CT. I always tell people to focus on the hot new coins, the most hyped assets. I mean, this thing's called hype. And chart looks great, right? So like throughout the altcoin downturn, this was completely unaffected, right? You would not know by looking at this chart in isolation that we had what we had across the altcoins. Breaking out of a diagonal level here, right? So it was an anticipatory breakout trade here, but we're still very close to entry. Simple as that, right? Very simple play here. Not much more to talk about. Not much confluence needed at all. Just analyzing what's strong and moving into strong markets. JTO was a bid play, and so was HBAR. So again, I'm not sure if I would recommend or advocate bidding if you're low in experience as a trader. But yeah, for the more experienced people and those that feel more adept in trading and the current market conditions, then bidding can be a viable option. I would still keep into consideration notions of strength, for instance, and technicals. So if you're playing bids or any downside positioning, right? And this is downside positioning, right? You're not playing a trade to the upside, you're playing it to the downside. Then I would recommend having some level of analysis, some level of validity and confluence to back you up. This was a simple trade, essentially, right? I was seeing how JTO was holding up, right? Still just completely range bound here. Relative strength holding up relatively well, whilst other altcoins are completely losing their rag. And just essentially set scaled bids underneath equal lows, right? So equal lows become more of a target than isolated lows. So that gives me more credence, more confluence, and more confirmation that this is a good play. Right, so essentially just scaling bids here. Get filled, average is 50% of that. Positions in decent stead, right? So the position's in decent stead. And to touch on validity a bit more again. So I spoke about validity in the last stream. So validity on one axis, trend on the other. And yeah, essentially validity is just the umbrella term for time frame and confluence. So as we know, the higher time frames have more validity, okay? Lower time frames have less validity. As we also know, setups with more confluence have more validity than those that aren't heavily confluenced, right? So validity is just an umbrella term for confluence and time frames. Now, what I was touching on in the last session is that the more trending the market is, right, the less validity we need. So you can see that here. So the more trending, the less validity, okay? The less trending, the more, so the less trending here, the more validity. So which is why I'm talking about, you know, positions like JTO here, and also positions like H bar, right? So my final position, H bar here. Again, this was 50% bid, right? So I had bids here, scaling in. So scaled bids here. If you don't know what scaled bids are, it's just multiple laddered levels. I use in Silico Terminal as a third-party software to execute these. You can also do them directly on Bybit these days. So first installment, scaled bids. Second installment as we came away here, and I could see that the clean 2-hour divergence was playing here. All right, so this is a very nice divergence here. Higher lows, lower lows, again, into this intra-demand zone. So, yeah, essentially the plays to the upside that I've been taking are zero confluence trades, right? So hype, there's nothing here, right? It's just a trend line, strength, ape, that's it. But the plays to the downside, right? Because the trend isn't as strong, we need to increase that stringency. We need to increase that confluence, okay? Which is why I was targeting H bar, clean demand zone to work with, right? So a lot more confluence here. So we've got demand plus the divergence, okay? So these intra-demand zones, as I've touched on before, really, really nice ways to play into the market, okay? So trending markets, really clean ways to play into positioning, okay? Because essentially what you can do is, if we take the previous example we were looking at, I think it was Sats. So Sats, yes, we can position into this market, right? We play the divergence. Let's say we're entering here. But because it's a divergence-based play, we're essentially just guesstimating where our stop should go and going, okay, cool. Do I want to do it here? Probably not. Well, you probably do to squeeze in as much size as possible, but I know I shouldn't be doing that, right? So I'm just going to cater for one more leg down. And you know what? I may even cater even more to cater for the 4-hour divergence, right? So you're looking at something like this. Let's say we're targeting up here, right? The nice thing when you're working with zones, demand zones, for instance, is you have no guesswork involved, right, in your stop placement and sizing. Essentially, all you're doing is entering either at the top of the zone or as we start moving away from the zone, and just placing your stop slightly under, okay, in case we do this and sweep the low, but not catering for anything more than a shallow sweep, okay? So exactly as I've done here, which gives you a nice tight stop, right? This is still a very nice tight stop. Whilst giving you good size, tight stop, and responsibly placed in validation, okay? So this is very responsible, this stop placement. Even putting it at the base wouldn't be too bad, right? I don't like risking it, so this is a nice middle ground for me. But essentially been able to move into a position like this with very good size, right? Now we've got confluence like this occurring. Okay, so we're breaking out of diagonals to the upside, having been positioned from the downside, essentially. So again, just to cover off, I know I've run through this multiple times before, but for those that aren't aware, okay, really good example here of that sort of intra-demand zone. Okay, so again, this was something that I was bidding, longed it up to here. Really nice play. Okay, and you're protected essentially by this demand zone. So if price does start coming down, okay, it will do something like this, most likely, and then move off. So it sort of acts as a buffer for your trade. And I was only really willing to position into H bar based on this buffer, okay? This made all the difference to the trade. This is why I was looking at this market. It was to have that buffer in between me and my stop, just in case we do get some sort of, longer correction in the market. Let's say the 4-hour divergences across the alts played out. This buffer is likely going to save me, okay? So I may even survive that move down to the 4-hour based on this buffer, which could just be another tap down, right? And then move up. So again, just another note on validity, the levels of confluence we need when approaching downside plays versus upside plays, completely different ballpark, and then also covering off that this is just talking about perps and not talking about spot. Classic OF setup, yeah, you know it, V, you know it. What else did I want to run through with you guys? So another thing was lower time frame versus higher time frame setups. So I hope it's been very, very clear to you guys so far. Focus on strength, right? Just focus on strength. In bull markets, focus on strength to the upside. In bear markets, focus on strength to the downside, okay? So essentially what we're looking at here is a lower time frame trade. I'll still classify this as a lower time frame position. Same with JTO and same with hype, right? So we're looking at the 2 hours and the 1 hours. Those that have been following me for a while and throughout my trading through this cycle will know that I was looking at daily setups as well before. Okay, and I just wanted to sort of revisit these now. So you can see here, this was the breakout trade here. Right, so if anyone was taking this, it would have been entry here, stop under here, looking for the position trade. Right, these are the setups that the dailies can provide. But as you can see, we're basically just back down to entry here, right? So we're back down to entry after 17 days, right? So 17 days. If you're taking these daily position trades, that yes, obviously granted, we know that these take longer to play out, right? But what they'll offer is higher validity, as we spoke about, right? Time frame being one of the metrics under the umbrella of validity. But look at this, right? Market wipes out, right? Alts take a beating, and you basically just round tripped. And let's say, for instance, that up here, you said to yourself, you want to protect yourself, move your stop up to break even. Well, you've just been stopped out on the position. After 17 days of opportunity cost, right? You've just broken even. And this can be true for every daily setup that we were looking at pretty much. Again, right, Badger. Yeah, sure, it's giving a clean retest to the level, right? Stepping in here might make more sense. But if you're taking this daily break again, we're back to break even. I'm not saying you would have got stopped out and lost cash, because these have all survived, right? If you just basically placed your stop where you initially had it placed and didn't move it. But my main point is that you would have round tripped, right? So hence why I'm focusing on the hourly setups, hence why I'm focusing on the 2 hours, maybe looking at the 4s. But that's all I'm doing. I'm not scanning past the 4s, right? So I do, first thing in the morning, I do an hourly full scan. Right, go to the top, scan through on the hourly, like so. Finish the watch list, then move over to the 4 hour, back to the top, which gives me some more, slightly broader, higher time frame zones to work with, perhaps something like this. right, as a potential breakout trade to the upside, looking for something like this. Consolidation, break, ideally. So it starts to give me some more higher time frame, wider picture levels to work with. Looking at the 4 hour, but I'm not really looking at the daily that much, right? So I'll scan for the daily once every few days perhaps. And the only reason I'm looking at the daily is to use it as a domino effect essentially. So we covered BOEM last time. Obviously it's taken an absolute battering, but BOEM is one of those charts that has a clean daily level. Okay, so clean daily level here. Even more validated by the last bit of price action, right? Just another touch point to the level. So this is a very good level to work with now on the daily. So then, knowing that we have the daily level in place, then we can start migrating down to the lower time frames. You know, looking to take, for instance, a reclaim here. And, you know, if we're looking at the 2 hour structure or the hourly structure or wherever the divergence is present, you combine it with, you know, a reclaim of this level here, and we're weaving it into a much larger play, right? So taking a stab and essentially a gamble on a downside play with the higher time frame picture in mind makes it much juicier, right? So think about it as, you know, like you can think about it in terms of like R, right? We're obviously trying to look for setups that have the highest R. We're not looking to position into trades that have, right? So we're not going to like take a divergence play here when there's a close hitch nearby, right? So I don't really want to be positioning in something like this. Because the viable R on the trade is very small, okay? So let's say this is the confirmation candle. We put our stop here just in case the div keeps diving, so to speak. And our, you know, take profit level to the first trouble area, first hitch, whatever you want to call it, is very, very poor, right? So we always want to squeeze as much juice out of the trades, focus on the trades with the best R probabilities, and yeah, maximize on profits basically. Doing so into a high time frame picture is very much one of those ways to do so, right? So if you are taking stabs on plays to the downside, then make sure they're woven into plays to the upside that then domino into a higher time frame picture, okay? So let's assume we're going to do something like this on BOEM. Consolidate, break. So let's say this is the daily break here. Then the trigger for the daily break would be here. Okay, stop under the consolidation. You can't really see the consolidation box here, but stop under the consolidation. Playing it to wherever you want to play it, right? Let's play it to the highs. So 4R trade. Whereas if you move into levels here, right, assuming that the deviation's done, you can even give it a bit more buffer room, whatever you want to do. Then obviously the R is going to be completely different on this trade. All right, so we've got it double there already. And if we tighten up stop to the lows, assuming that any damage to the downside is done, then we've basically tripled it, okay? So you're just weaving into the higher time frame picture. Right, I'm just going to check some of the comments and questions. Is it good to trust API and Silico's trade perps? Yeah, it's always fared me well. I've been using it for years. What about the tier breakout trade? Let's have a look. which tier breakout trade. Could you look at cat again for me, bro? Is this Mauritian monster again? The man's going to sleep thinking about cat, waking up thinking about cat, brushing his teeth thinking about cat. Yes, it is. Yeah, I thought so. All right, so cat. Let's have a look at the lower time frames. So cat's exactly the same thing as we've just covered. So we could see this. 4-hour div. Play. Like so. Like so here. Or this move's been done. Okay. We move up off the back of the hourly divergence and structures here. All right, so very clean structures on the hourly. And we basically just defend market structure, same as ETH on spot. Because there is this cluster here. It's, yeah, as simple as that, basically. Do you consider funding rates open interests when scanning your watch list? No, not at all. No, not something that I factor into my analysis. I mean, with the alts, it's pretty much just basic price action because there's not really any reliable order flow data on that side. BTC and ETH, it's deltas, spot deltas, aggregated liquidations, aggregated delta, and yeah, that's it. Two words on Exion, all right. Looking very solid here. Fresh Bybit listing. Yeah, this looks very nice. Diagonal breakout. Solid structure on the AO here. Very good on the 2-hour time frame. Yeah. Higher lows on the AO. Lower lows. And you can even see this div structure here on the RSI as well. So Exion looks good. Held up relatively well as well. In terms of the strong markets, are there any other strong markets in here that you guys are looking at that I've missed? Agen, IO, JTO, Morpho, Ondo, SCR, SPX, OM, Hype. Because one of the members of the group brought my attention to OM earlier. Thank you for that. So yeah, I'll be watching this closely for the break. Ray? Yeah, Altcoin. We all know about that. I meant more on the perp side. My best friend is heavily positioned into Altcoin. He's been beating at home and trying to get me into that position for a long time. And a fair bit of FOMO, but that's okay. I'm pretty much staying away from the spot memes now. Portfolio is gaming, AI, and hot sectors with good FA behind them. I'm happy with my portfolio. Sui. Let's look at Ray as well. Yeah, Ray looks decent here. No divergences though, really, to push this up. But yeah, clean takeout of the range lows. Yeah, just tagged it to the T. And again, this would have been a really nice example of when to place bids, right? Holding up really strong during the downturn. In a clear uptrend, right, clearly. And there's one isolated very obvious low to wipe. In the same respect of, you know, this being very obvious on H bar as well, very obvious demand zone, right? So we have to take things that are obvious, they stand out to our eyes. But again, a good example of when to do so on Ray. Sui. Not too bad, not too great though. This isn't as strong as the other ones we were looking at in this watch list. Just imagine explaining to someone that you're investing in an asset called Altcoin. Imagine their face. I know, yeah, normies would literally just think you're an idiot. And they wouldn't be too wrong. This space is becoming more and more of a joke as, you know, the more years I spend here, it becomes more laughable. But there you go. We're here to make money at the end of the day. All right, guys. So unless you guys have any more questions for me, anything else you want me to particularly look at, I'm going to log off. A quick look at Nyan. Gladly. One of my big spot gaming bags. I mean, I know the Nyan chart. There's not really too much to look at. Angelo looks very good, basically. Looks very good. Broken out of a daily trend line here. Yeah, essentially a very strong asset in terms of its positioning, what it looks like on the charts. You can see the retest here on the daily. But also, yeah, this is a Solana. This is my top Solana gaming pick, right? I haven't actually seen any game with graphics and gameplay quite up to this scratch. Carrot and Kata come close. But in terms of the graphics and visuals, Nyan is far superior. Really easy and digestible sort of narrative to work with as well. And yeah, looks like good gameplay. And it's also within the Sol ecosystem. So Nyan from a fundamental side of things looks good. Chart side of things, equally good. There's nothing to say about Exion new listing under 1 billion market cap. Arguably undervalued if you think L1s should be worth more just by spot and hope for 1 billion market cap. Yeah, I mean, like the whole fresh Bybit listing thing, actually just aping into spot, you know, fresh Bybit launches is probably going to outperform a lot of people, right? I'm not messing around when I say that. Like, let's take Super, for instance. Or let's look for it on Bybit. I mean, there you go. Right? So Super. Oh no, sorry, not Super. I'm talking about Supra. The position that haunted me. So again, fresh Bybit listing on the 27th of November. Broke out here. Let's say it's a diagonal break actually. Or you could take the diagonal from here even. Diagonal here, horizontal up here. The horizontal doesn't really work. But anyway, you get the point. Huge multipliers, right? So this is going from 1 all the way to 8 basically, so an 8x. It's trading like it's trading on chain, you know? So yeah, focus on fresh Bybit listings. Continue doing so throughout the run. Been saying it before and we'll keep saying it basically. There's a lot of alpha in fresh Bybit listings. Where would you look to get into Agen if you missed the initial breakout? No, that's it basically. So the positioning would have been on the 30-minute. because I'm happy to go down to the 30, right? Happy to go down to the 30. And this had clean touch points as well. So if this didn't look the same, and we actually had bodies closing up here, for instance, and bodies closing up here, then I wouldn't be able to take this trade on the 30, but it was viable on the 30-minute because it's still a very clean trend line on this time frame. So the play would have basically been here, and that's it. What you can do is look for a retest of the trend line, and that's sort of also substantiated by this little cluster we have in here of liquidity. So we could see something like this. Could do, but that's not in my playbook. All right, I don't really look for retests. If the asset is truly strong, then it should just move without giving a retest. So by virtue of taking the retest, you're taking something which is inherently showing underlying weakness to a degree. And that's not what I want to see when playing trades to the upside. Where would you look to get into Psy? My man is the king of FOMO. Just move on, man. If you're not in Psy, then just you don't look for an entry, man. Like, Psy has just been an absolute runner. Right, I was calling Psy from this range down here. So this was the Psy play, positioning into pre-breakout essentially. Just based on the fundamentals more than anything, and the sector, it being, you know, I think it down here, it was a 3 million market cap AI coin, with quite good accolade behind it as well. So yeah, now that it's moved away, I mean, the only play that you can take on Psy is essentially just giving into FOMO, and saying that you're going to tuck it away for the next 6 months, purely on a valuation basis. Right, purely on a valuation basis. So if we look at CoinGecko, sharp, what's the market cap? Right, it's still very low, right? Especially for an AI coin, like a decent AI coin. So you could ape on a valuation basis, tuck it away for three to 6 months, 3 to 4 months, whatever you want to do, and come back to it. But in terms of looking for technical triggers to enter into Psy, good luck to you, basically. Got into Psy on the horizontal break. Nice, very good, very, very good. Myself as well. I've been in Psy from the pre-sale, aped a lot more in this zone here. Finally added on this candle here, and yeah, got a very sizable position on Psy. PYR and Gala. Let's have a look. Decent on the higher time frames. Recent correction has reset it to mid on the daily, which is good. So 4 hour now has to reclaim this mid-level is key. You can see the support and resistance has basically acted as the midpoint on the RSI. So need to reclaim this. That's very important. And also need to reclaim the underside of this trend line as well. So that's what I'm looking for strength. Gala. Daily, again, clean reset. I imagine this is the case across many alts. Another very, very healthy indicator for the alt market. Same deal. 4 back at 50. Needs to reclaim. And then in terms of levels that need to be overcome to the upside, I'd say 12 hours supply here. Right. So yeah, we've got some work to do on the majority of markets, I assume, as well. Do you also hedge your spot exposure? In what regard? As in going short on perps when I can? Nice one, Nazar. Good to catch you, man. Tia, we've covered. SEI. Daily. This dipped a bit lower. Done so to stretch into this liquidity here. But lost the 50 there. So that's the first reclaim that needs to occur. So it's a 2 hour, yeah, 2 hour divergence. You can sort of see it from the 4. So yeah, either the 4 plays, right? As with everything else, I'm not going to draw it again. Either the 4 plays or the 2 plays. Okay. And with these, by the way, in terms of execution, as you can see from my positioning, right? I'm taking stabs, right? I've taken stabs in and around this region. Not on these are examples, but I'm already in position, okay, on a bunch of coins. H bar is the only one that had the technical 2 hour divergence, but just to note that, you know, I do take these. I don't just sort of live in anxiety and fear of the 4 playing out. Like I said before, I'm aware that the 4 could play out, and as a result, I want to be having these buffers in place, right? So I want to be having these intra-demand zones that I can work with, just so that it means that, you know, if the rest of the market do go for those 4 hour bull divs, that I'm somewhat protected, essentially. But you can see this is only one of my 3 positions. The rest are just basically taking it off. A bid that worked out nicely, and then strength here. Hedging by going short on perps? No, absolutely not. They're just fundamental picks in the right sectors of hype narratives that I just tuck away on cold storage, and I don't look at them, essentially. If one of them goes mental and goes completely parabolic whilst the others are stagnant, then I'll likely siphon off profits and then basically size into the other plays. Only if I want to, right? Only if they're tasty enough from the fundamental side of things. So for instance, an example is I took some profit on Psy just a bit because I was largely overexposed to this market and it pumped to a nice degree, and then recycled some profits into Carrot and into Nine, which we've already looked at as well, right? So again, expect this to play huge catch up if we do get this this gaming cycle and gaming run that I'm hoping for. Good news today with the whole Beam partnerships as well. That should hopefully add some fuel to the fire. But again, I'm largely just, you know, holding spot, tucking it away on my ledger, and that's it, right? I'm active on perps, extremely active, scanning sometimes up to 900 charts a day. Looking to maximize on value and opportunity on the perp side, but on the spot side, it's completely the opposite. Set and forget. Whack it into cold storage so you have custody of the assets, and that's it. For SEI, playing into strength or waiting for the daily 50 RSI reclaim, or are you looking for any other signals? Let's have a look again. It depends, spot or perps. Which one are you talking about? Right, guys, after this question, I need to wrap up because I need to hop in the car and go for a little road trip. But yeah, let me know. Spot swing. This is a decent place to do that, in my opinion. off the back of the hourly structures here into this, I'm not going to call it demand, but liquidity of some sort. Just be cognizant of the fact that we could go for fours. Right, we could go for fours, but then it's about, you know, how much of a perfectionist do you want to be with your entry? Are you holding this for the long term? Yeah, it's a personal, subjective thing. All right, guys, been lovely tuning in and catching up with you all, and yeah, I hope you enjoy the rest of your weeks. I hope this session imparted some value to you all, and catch you on the next